Welcome to Power Charting. I'm your host, Bruce Frazier, and we are going to have a discussion in this episode, a Wyckoff workshop on reaccumulation. Reaccumulation structures are, in my humble opinion, among the most important structures that we can master as Wyckofians. And so today, let's do a review of reaccumulation, cover the basic concepts, look at some case studies, and introduce this very important concept. And then, as time goes on, we will continue to work in this area with real life examples. Some today are going to be historic examples, and a couple are current. So we are going to do a reaccumulation workshop today. We're going to study the schematics for reaccumulation, and then follow that up with case studies, two major types, and then finish with a current market analysis of the SP 500 using classic Wyckoffian trendline technique. So here we go. This is a conventional Wyckoff reaccumulation type structure. It's, as you can see, it's a pause in an uptrend. These pauses can last from a few months, a number of weeks, a few months to a year or more. And they also can be seen in intraday environments, which is similar in concept, but a subject for another episode. Here we can see that there is a stopping of the uptrend as we are familiar with when we study distribution concepts, and will stop an uptrend with a buying climax. So after preliminary supply, where you have a short pause with a minor reaction, you get a surge into a buying climax, usually associated with high volume, but definitely with high volatility. And that is followed by an automatic reaction. Automatic reaction is a large reaction that is much larger than the reactions that preceded it in the uptrend, typically steeper, more volatile, has high levels of volume and volatility as it goes down. And this is a major clue that the uptrend is being stopped, at least temporarily. This is also the way distribution begins in most situations. And so at the time that a reaccumulation begins, it's very difficult to be able to tell the difference between a reaccumulation beginning and distribution beginning. But as time goes on, we will see that there is a distinction between the two events as reaccumulation completes into the beginning of a new uptrend and distribution completing into the start of an important markdown. The thing that separates a buying climax automatic reaction and completes the beginning of the range bound condition is the secondary test. And the secondary test is a rally that is short and sharp, that goes up to the level of resistance as defined by the buying climax. So we draw resistance at the peak price that the buying climax goes to, and immediately draw a horizontal resistance line over the top of the market. After the automatic reaction, well, usually around the same time, we see both, and then we draw resistance and support. Once the automatic reaction concludes with a rally that goes up to the secondary test, we draw support. So now we have the range-bound condition that the market should pretty much stay within for the remainder of the accumulation area. And we'll see that there's some variation on that theme as we go. The thing that you'll notice here is that as we go through the reaccumulation period, that there generally is a diminishment of volatility, which is unlike what happens in distribution. So you can see here that at these key support areas, early on, there is a lot of volatility, but the volatility tends to diminish as we go through time. And with a final last point of support here, there's a jump, and this is the most important part, is that you have a dramatic expansion of the uptrend as price and volume move easily in the direction of the prior uptrend that occurred before. And so this is a very important idea. The notion here is that we as Wyckoffians want to initiate our positions at the conclusion of the reaccumulation testing phase and have that be the area where we start to either initiate positions for the next uptrend, or we're adding to positions that we put on either in a prior earlier reaccumulation or in the accumulation phase at the beginning of the bull run for this stock or this index. And so here, let's talk a little bit about the two types of reaccumulations that we will get. This is a rising gradient, the green line. You can see here that this green line is demonstrating that after the automatic reaction, there's a series of higher lows throughout the course of the reaccumulation. Very common thing to see happen is this rising gradient of higher lows. Now, why does this happen? This happens because the composite operator, the large institutions that are very well informed, that already have built a large position in the stock in the accumulation area, or they're building their initial position now in this reaccumulation, they are aggressively bidding this stock or this index in the areas of the lows. So they see the automatic reaction low, and they are then, because they're aggressively wanting to buy shares, they are willing to put their bids just above the lows of the automatic reaction. And then the next low that comes, they'll put their bids above the prior low, et cetera, as you go through. And you can see each one of these lows is there's less volatility, and there's good bids under the market. This typically happens early in a new uptrend, the first few reaccumulations that you get. And so this is very important to keep in mind. And the conclusion is, and part of the reason this happens with reaccumulation is because the stock is so well held by strong hands after the accumulation is complete that the uptrend is a period of time when the stock is strongly held, but there is some stock available because speculators and traders have come into the mix as the uptrend has gone on, and they get on the uptrend, they participate in it. And as the uptrend is coming to a conclusion at the buying climax, they are the first ones to get shaken out of the position, and they become disengaged because they don't like to be in long trading ranges, where the CO is infinitely patient, willing to build big positions. They love the long pauses because this gives them the time that they need to be able to accumulate additional shares. And so speculators will become disinvolved, will go off and find another playground to play in, and the CO is able to absorb, vacuum up their shares. And once the stock that was available is all accumulated, there's no reason for the stock to sit around quietly bouncing around in a trading range. A little bit of additional demand just immediately pushes it into a new uptrend. So this is why we're so interested in the reaccumulations. So here, let's look at a different example. This was a rising gradient. Here is the next example, which is the spring and a test. Spring and a test is a very common form of a reaccumulation structure, and the second one we're going to talk about today. And so you can see here that after a period of time, there will be a high degree of volatility until you get to that final testing area, which we call phase C, where there will be a drive down to and through the key important prior lows in the accumulation area, reaccumulation, and that is the automatic reaction low, the secondary test that follows it, And so this will be an attempt to shake out or bring stock out from weak holders as the stock undercuts the key prior lows and scares some of the weaker holders. And so this spring type action and then the test that follows it is a temporary phenomenon and results in a large change of character as the spring reverses back up into the trading area and then just with ease of movement goes up to the top of the range and out. We've talked about springs. I've written about springs in the blogs, etc. And by the way, if you look at these titles down at the bottom, these are the prior blogs that you can go back to and see these schematics and these case studies that we're going to talk about. So here is a historic example of Apple back in 2010. And you can see here this rising gradient over here. There's two reaccumulations in the course of this chart. This is a daily chart, has two reaccumulation structures, and this is what makes them so powerful, is that you get one accumulation as a stock completes and gets ready to enter into a new bull market. With reaccumulation, you could have 3, 4, 5, 6 reaccumulation periods in an ongoing uptrend that could last 2, 3, 4, 5 years. And so reaccumulations of these dramatic uptrending stocks are really important to Wyckoffians because it gives us an opportunity to assess the quality of the advance, and it also gives us an opportunity to build or extend, enhance, add to our positions as the stock or the index is going up. So here we can see with Apple, we can see the rising gradient that we have. Let's just draw this. Excuse my artistic license. You can see here higher lows throughout. Buying climax, big gap up into a buying climax and then an automatic reaction. And here are the outer bounds of our trading range. And look how well for the number of months, about 4.5, 5 months of trading range, the Apple stays in and around this range bound condition. There's a sign of strength advance where it goes up above the resistance area and then it stalls and comes back in. But notice this, commonly we as Wyckoffians after a sign of strength will look for a last point of support. And this is the last point that it comes down to, where it finds support at a higher low in this case, and then has a attempt to rally and a test. We'll look at the change of character as Apple just jumps right out of this area and goes into a robust new uptrend, producing a buying climax and then an automatic reaction. This was the flash crash. And you can see here that it came back down to this area. We drew the support line on the closing low because the low of the flash crash was so much lower. And so this proved to be a very important place because look at the support that was generated around this area. Resistance is drawn at the buying climax, support at the automatic reaction, stays within this range bound area for 4 more months, and then comes down into what I am calling a minor spring number 3. And a minor spring just takes out these 2 prior lows and pauses there, tests, and turns up, and look at the persistency with which this advance occurs, telling us that this reaccumulation is complete and new uptrend is on the way. We would look to get long Apple at the LPS, the test of the LPS, the backing up of the jump across the creek here, which is just another test, the backup after it's out of the reaccumulation area, and the backup there. And then in this case, on the spring, the test of the spring here would be a place to put on a tranche. And then these good upward pushes above the creek here, which is this pink line, is a good place to follow the trend up. And then on the backup after jumping out of the reaccumulation structure. Okay, so now let's keep moving here because we have a lot of ground to cover. is this is just another example. You can go back and look at these as time permits. Here's another spring number 3. Spring number 3s are just springs that come on not expanding volume. The volume is relatively modest as it goes down, showing that there's a complete exhaustion of supply. And then it turns back up. And look at the way that AutoZone rallies off of that spring. It's just beautiful. And then a true tell is after the sign of strength, there's a backup. Well, look at, there's no backing up. All it does is go sideways, which shows that this stock is strongly held in very strong hands, and that the CO types and the institutions that really want to be in the stock have wrapped up all the supply. There's no supply. Any additional demand will drive the stock up easily. Okay, let's keep going here. Now, the point to make here as we look at this Polaris case study is that in the case of Polaris, you have a secondary test that goes down through the lows of the automatic reaction after a beautiful buying climax. And then notice how there's this rising gradient of higher lows throughout. After a sign of strength, we look for a backup that's going to produce a last point of support. That's sort of a standard rule for us. And you'll notice that in this case, this backup goes back below the resistance line, but does not go down to support, which is bullish. And so a series of tails here on these bars, these are weekly bars, but this is a test of the action of the LPS, a good place to initiate positions. And then look at how well Polaris just is up and out. Look at this flat pause, which shows that Polaris is well bid and in strong hands. Now, the point of showing you this is because we have the ability, and we should always take a point and figure count of the accumulation or the reaccumulation areas. And in this case, here's the count line at $54 on Polaris. Well, look at this. It counts up to 130, 141 after it backs up here and tests. And so we have this very large count, which is produced in a reaccumulation that takes about 6 months to form. And so this is quite impressive. This is a large count that's produced. And let's go to our next example, which again is Polaris. There's a point to this, and that is, again, here we have a rising gradient, which means that Polaris is in strong hands and it's being well bid, and it shows that the stock is well wrapped up in prior accumulation and reaccumulation areas. The stock attempts to get through resistance twice, backs up here. This is a last point of support right there, jumps up and out for a backup and another last point of support. Either of these areas could be bought. And so we can see here, especially here, that there's very little give back in the backing up area, that just goes sideways and then it turns up into a new uptrend. We have another point and figure count we can take. And so this count across this area, and I'll leave it to you to go back and study this, is 156 to 168. And so here's another really nice count that's being produced by a reaccumulation area. Well, let's look at what happened. So here we can see robust uptrend. This is a really important point I want to make. So a really good uptrend in Polaris all the way through here. This is what the CO is wanting to campaign. This is their interest. And look at here in 2011, there's a beautiful reaccumulation that takes place, which we looked at, and it counts to 130, 141. Then there's another reaccumulation that takes a number of months, and it counts to 156, 168. Well, notice this, the count that goes 130, 141 is achieved right in here. And so this is a point where you have a stop, a pause that takes place, and then we have another count that's produced by the next reaccumulation, 156, 168, and this area is achieved right here. And so both of these counts became important counts. And this also shows that in a long-term uptrend, in this case, it goes for almost 4 years, this uptrend. It goes actually more than 4 years, that in that 4-year period, there are these pauses along the way that are very tactically important to us as Wyckofians that we want to be able to analyze and participate in if it's appropriate for them to go into new uptrends. Here's Apple with a spring, again, springing into action. This is a nice blog that talks about the different kinds of springs. I want to make one point here, and that is after the buying climax and the automatic reaction, you have a series of lower highs that takes place. Well, as a rule of thumb, this is something that happens often. It doesn't have to always happen, but when you get a series of lower highs and a reaccumulation, as we see here in Apple, we are going to prepare ourselves for the likelihood or the possibility that we're going to get an attempt to spring the lows. So you noticed in the upward gradient that there tended to be higher highs and higher lows in the range-bound condition before the uptrend began. Well, when you get lower highs and lower lows, as you see here in Apple, we brace ourselves for the likelihood that we're going to get a spring, some kind of a spring of the key lows, and you can see the automatic reaction low is being undercut by the spring, and then a test, and then look what happens. There's just a sudden change of character, and there's this beautiful rally up and out, and look at the rally. There's not even an attempt to back up after the resistance area is being superseded, and it just goes up and up and up and up. This stock is very strongly held in this time period in 2014. And so we also have to brace ourselves for the likelihood that we're going to have to reach up after the phase C testing low area is completed and the rally begins, that we want to reach up and buy strength. And this is the one place where we're willing to reach up and buy strength after the test of a spring is in the phase D rally up and out of the reaccumulation area. Very exciting pattern, and one we should study and then brace ourselves to have the right tactics. This is Schwab. This is a spring also. You can see that very, very briefly, there's a undercutting of the automatic reaction low here, and this area comes on really no appreciable increase in volume, which shows that supply is exhausted, and then it just turns up, and look at this wonderful jump up and out for a sign of strength, and then a backup, which the backup is also considered a last point of support. These are excellent places. A low volume spring of the low area can be bought right away. The strength you can follow by buying the strength on the turn, and the backup is an excellent place to initiate or add to positions. So this is a great case study also. And then finally, we have two examples in a recent blog that just came out, and that is Rio Tinto. And this was an example of, look at the lower peaks. So here's the lower peaks after an upthrust, and you can see it concluded with a spring, which is a point that we just made. And so the spring, look at the beautiful change of character as it jumps up and out, and now Rio Tinto is on its way. Please have a look at that blog. And then this is in the same industry group, BHP Billiton, and look at the higher lows throughout, rising gradient, beautiful. So there's a trend line here. You can see that after a sign of strength, it backs up into an LPS, and then it jumps up and out, pivots out, and this is actually the strongest of the large cap stocks in this group. So Rio and BHP, BHP being the strongest. So, and also notice this about the relative strength. Commonly, relative strength will weaken during a reaccumulation, but in this case, it has two flirtations with the moving average. Moving average continues to rise, and so this continues to be on a nice upward trend for relative strength as the reaccumulation is forming. Okay, in the time that we have left, I'll move quickly, but I have here three charts that I want to show you on the S&P 500. We've had this beautiful rally that's occurred since the end of December of 2018. We are looking at a 2-hour chart, and I'm doing Wyckoffian trendline analysis here. And so very briefly, what you do with trendline analysis is you identify two adjacent points, these red boxes here. In this case, I'm doing reverse use of trendline. And so this means that I'm drawing the supply line over the market first, because these trend lines are most obvious. You can see that there's really not as good a place to draw the trend line underneath. So we're going to draw a parallel oversold line here. So here and here, these are adjacent to each other. They approximately are rallies of the same duration and extent, these two rallies, and we draw a trend line and extend that upward. So this becomes our stride for the advance. Here underneath, we draw the oversold line as a parallel. We simply take this line down, put it on the bottom of this intervening low, and look what happens is that we can see very clearly that the momentum is slowing in this 2-hour chart. And then what happened was that we have a attempt to come underneath the stride of the trend channel, a test from underneath, and now it's going sideways. So we pretty much lost our momentum in the 2-hour chart of the S&P 500 going back to the beginning of, going back to the beginning of 2019. So this is interesting. Well, let's go on and move to the next in the short time we have. And this is a trend line on the weekly chart. So we draw the trend line on the two adjacent lows, here and here. We draw the parallel line on the high that intercedes between them. And so we get a trend channel. So our trend line is drawn very early in the uptrend. And this goes back to the beginning of 2016. So we see here a run up and out, overbought, throw over of the channel at the beginning of 2018. And then within 3 weeks, a very sharp decline that goes all the way back to the bottom of the channel, becomes oversold, cannot stay below it, and rallies back up to the top of the channel again. Comes back down and touches 1, 2, 3 times, but can't stay below it, and then produces a rally into an up thrust here above the resistance line. But then look what happens. It can't get to the resistance area, comes down and collapses down into the lows of late December. Now we have a rally, and look at this. This is a resistance line that's been touched 4 times. 1, 2, 3, 4. And we are right on the resistance line at this time with a tight little bar that is at the top of a resistance area. So this would be a natural place for this uptrend to stop. I think that what needs to happen is some kind of a tight backup type action, which shows that the stock market is well held in strong hands, and not a decline that goes back down to support quickly. So that is my wish, let's say. So finally, we're going to end with this monthly chart. Again, 3 touches on this demand line underneath. This is really impressive back to 2009. This encompasses the whole bull run. And look here, right at this area, we have rallied up to the resistance of the overbought line, and here we've stopped. And at this time, I'd like to say thank you for attending. Look for blogs where we talk more about reaccumulation. Have a great week, and we'll see you next time.